Welcome back, guys. Brentonhanes here, and thanks for tuning in. All right, guys, today I want to talk about analyzing income property. What does it look like? What does it encompass? What kind of software do you use? Well, today you guys are in for a treat. I'm going to give you a copy of the actual spreadsheet that we use in the office. We refer to it as a quick and dirty. It's real simple. It gives us a quick snapshot if this property makes sense. But first, what I want you to do is hit that subscribe button. Then I want you to head on over to my website, realestate365.net, and I want you to download that spreadsheet. Now, all I need is just a name and an email address, and I know we don't like giving out information. Don't worry, I'm not going to spam you. That email address is just there so I can reach out to you to let you know that that spreadsheet's been updated. I plan on adding new features, make any corrections if needed, and we can go from there. So let's dive in it. Let's check it out. All right, so here we are. Hopefully you all had a chance to download my spreadsheet. You can see it's broken down into three parts. We have our input page, our analysis page, and our 5-year projection page. And it's real simple to break down, and I'll actually put a live property that's from the MLS in here. So I have a 4-unit building that we'll put in and fill it out and kind of look at some of these, some of the analysis on this property. So let's dive in. First one's going to be the date. Okay, I want to know what date I analyzed it. The next field, I'm going to put in my name. So who analyzed it? There's a group of us that look at these so we can see who analyzed it. I'm not going to put in the property address just for the sake of, it doesn't really matter at this point. Either does year built. So let's take a look at the building square footage. So we have 3,808. Okay, we have a number of 4 units. Probably be looking at about a 25% down payment, and the asking price is $375,000. Okay. So now it's broken down to a couple different categories. We have our income, we have our annual expenses, and then some of our analysis input, how we can tweak it, and then what we can tweak on our 5-year. Now, I've also added a section down here for any notes that you want to talk about the property, anything that's property specific on your analysis, maybe something that you tweaked or why you use the numbers you use, just so it communicates that to everyone on your team if you have a team. So now I use a lot of different analysis for single family all the way up to 100 plus units. Okay, so I wanted just a real quick sheet that I could use to help my clients, help myself all across the board. So let's take a look and let's dive in a little bit deeper. So we're going to look at our income. So this is going to be on the monthly, so we're just going to take our rent roll, add it up. This one's going to be $2,900. Okay, we don't have any other income for this property. This could be laundry income, it could be parking, it could be storage. If you have larger buildings, it could be signage, it could be cell towers, things of that nature, anything other than that rental unit itself. Now, at market rent, so if you're in a single family, you're probably getting that vacant. If you're taking over a 4-unit, you probably have some existing tenants and things like that. So we're going to take a look. So currently the rents are averaging about $725 a unit. They're saying market rent's about $800, so that's $3,200 a month in income. Okay, so we're going to go down to our expenses. Okay, so they kind of just lump everything on this setup sheet into utilities. So I'm just going to use one line for all my utilities. Now I could ignore all these lines and I can write utilities down here and plug that number in if I wanted to. For me, I'm just going to use the top line and plug in utilities of $3,050. Okay. And that's probably going to include a lot of our trash, a lot of our water, electric, if we have a house meter, and things like that. Now this property does not have an HOA, so property taxes, we are looking at about $1,800 a year. Insurance, we're looking at about $2,400 a year. And let's take a look and see if we have anything else. So we have property management, we have repairs and maintenance, any miscellaneous expenses. So as you can see over here, I'm plugging in a management fee based off the percentage of our gross income. Okay, so and I use reserves for my maintenance and repair costs. Okay, and we can easily tweak that. They're utilizing about 1,500. I'm using 5% at 1740. Okay, so I'm also going to plug in 5% for my vacancy. So when I have a smaller unit building, I'm going to plug in a little bit more of my vacancy. And if it's a single family home, I'm going to probably use about 1 month's rent for my vacancy. Now, if I get into the larger buildings, I may be looking at a 2 or 3%. Okay, so there's going to be a lot of other tenants that are going to offset a couple of vacant units. Typically, on our portfolio, we run a very, very low vacancy factor right now. So mortgage rate, I'm just going to leave in 5.5%. I think that's being conservative. We're going to do it over a 30-year, and I'm using 10% for management, which is probably a little bit on the high side. If you manage it yourself, you can put in a 0 there, and you can put in whatever percentage that you want to do, and this will give you some of the dollar amounts of what it looks like. Okay, so now in our 5-year projection, we're going to look at an annual gross income increase every year. I'm going to throw in a 3%. I'm going to say my expenses are going to probably increase about 1%, and then, you can guess what your annual appreciation rate is. Okay. Now on market, we can say the same for our expenses. Okay, we can just plug those over and see what that looks like. Okay, so once we get all of everything here in blue figured out, we can click over to our analysis page. Okay, so this will break it down. So here's our gross income, current and market, property square footage, year built number of units. Then we can break down our GRM, okay, our gross rent multiplier, cap rates, cost per square foot on acquisition, cost per unit, debt coverage ratio. Okay, so now for you guys that are in the 4 units and less, debt coverage ratio isn't a big factor. As you get into the 5+ units, your lender is going to look at a DCR, debt coverage ratio. Okay, so let's take a quick look at this. So current rent, we have our purchase price, $375, our down payment, our first loan amount, our vacancy. That's going to leave us with our operating income, our expenses, and our NOI. Okay. Our interest rate, our annual debt service, monthly debt service, this is going to be our cash flow. Okay, this is our annual cash flow before taxes. And then I usually plug in a little bit of equity build-up, paying down that loan, and our total return. Okay, then we can jump over here into our market rents, so we can see that we got about 11% upside in our rents, which is pretty good. Okay, I like to see double digits. That gives me a little bit of factor. Okay. In our larger buildings, we like to see some upside if we create some turnover, rehab those units, and what could we get, and we can judge that. And that's just a quick little indicator that we use. So here we go. Purchase price, down payment, okay, into our vacancy, and we can look at our NOI and go through and look at our cash flow, cash on cash return, and our total return. And then at the bottom here, I've put in some first year indicators. What is our property value going to be? And that's based off of our appreciation, what our mortgage balance is going to be, and how much equity we will have in that building projected at the end of the first year. So, and then I break down our total return. Okay. So also on the input page, I'm using an effective tax rate to calculate some of those returns. So I'm using a 37.4%. It's probably pretty high. Mine was actually under 1% this last year. That was a little bit of an anomaly for me just because I started a farm and we had bought quite a bit of equipment and we wrote that equipment off our first year, but that's a whole nother video and conversation what we did there. Okay, so you can even plug in a picture here. You can go and just copy and paste and resize it, put it in. I notice a lot of guys on their analysis sheet don't put in pictures of the property. to me, I love to see that. As you know, I always print this out. I'll have a file. I can look at these numbers. I can bring it up on my phone. But I'm getting older. It's better to read the paper from me. I don't print out a ton of paper, but I do have a tangible file that I like, and I can email this out to everyone. So this is something that that I use, and then we have our 5-year projection. Okay, so this will get us what our return should be, what our equity buildup should look like, any projected sale price over the next 5 years, anticipating that 3% annual appreciation rate. Okay, that's going to be more of a gut feel for you. You can look at the history. You can kind of see where we're at in the cycle of the market and see what you think you're going to get. Okay, then I did a 5-year tax computation as well, and this is based off the effective tax rate. So you can see what are you going to owe, what are you going to save, and whatnot. Now keep in mind, guys, I'm not a tax guy. I'm not a financial planner. I'm not an insurance guy. I am not an attorney. Okay, so use this spreadsheet accordingly. Okay, these are just rough estimations as you dive in. What it doesn't account for is any rehab costs when you go in. Typically, all of us guys will put some money into rehabbing it. Okay, we do that quite a bit. I didn't put that in this analysis sheet. That's a balance sheet item, typically capital expenditures for us. But I just want to look at, as I'm comparing apples to apples, something I can just look at the internet really quick, MLS, and gauge it against other investments out there. We know we're going to look at hundreds of properties and write tons of offers before we find that gem. Okay, and this helps me decipher what's a gem and what's not a gem. Okay, so you guys, if you haven't downloaded it from my website, go visit my website, check it out. Any feedback, let me know. You guys see any errors, have any questions, let me know. We can make those changes. We're going to grow this page a little bit more. I'd like to add a return on equity page for you guys so you can analyze your current holdings, which is a great way to do so. So, like I said, subscribe to my channel, download the spreadsheet. Hope you guys find it helpful. Any questions, you got my phone number, you got my email address, leave a comment, and we will see you guys on the next one. Have a great one.